Well, I have the tough task of interesting you in an idea at just after 9 o'clock in the morning. I have to say, as a personal matter, I'm not interested in ideas until at least after 11. But let me do what I can. And my idea that I'm trying to interest you in is the notion that we need some form of global financial regulator. And the only advantage I have, I think, is that over the last couple of days, there have been quite a lot of discussion about what is going on in the international financial regulatory world, which has pointed once again to indiscipline, in other words, ideas emerging from different governments rather than emerging in a global context, and also doubts already about whether the G20 really can cut it, and you'll see that in today's papers. So that's the current background. Why, therefore, did we, in our meetings in Dubai, come up with this idea? Well, first of all, that is the way the current global regulatory system looks. There is a spider diagram of different organizations which deal with different parts of financial markets, from the banking rules to the securities rules, the insurance rules, the accounting rules, etc. And none of these bodies has any authority over any of the others. And that is vividly demonstrated by the fact that it took the Basel Committee about 12 years to produce Basel II. Why did it do so? Because there was nobody to hold it to account and say, what are you up to? When are you going to lay your egg? And I guess many of us would think that if in our daily lives we had nobody who ever asked whether we had completed our book or written our article or done our report, then maybe we'd just carry on working almost indefinitely without producing it. And that is essentially what the Basel Committee did. What we're arguing for is that the Financial Stability Board should be given authority in this system. Now, I would frankly say that the group so far has not fully articulated, has not written a constitution of what this global financial regulator would be, but I think at a minimum it would be able to do three things. One, it would be able to issue its own unvarnished view of what is going on in financial markets, threats to financial stability, without any political overlay. Secondly, it would have authority over the main standard setters to require them to deliver things on time. And thirdly, it would have some kind of sanctioning mechanism, like the WTO has in the event of trade dispute. In other words, if a country was not implementing global standards, there would be some form of sanction. Who is responsible for this, or who would be responsible for it? Well, we think the G20 finance ministers should be in pole position. We welcome the expansion from the G7 to G20, which has taken place in this crisis, bringing important economies like China and India into the decision-making process. We think, however, it's crucial that the finance ministers remain engaged in this. There is a great temptation for finance ministers and politicians to become interested in financial regulation at time of crisis and then not to pay much attention to it in the interim when markets normalize. We want to keep the G20 finance ministers engaged through their ownership of this global regulator. We think the proposal does go with the flow of the recently agreed changes to global governance. The G20 has already turned the Financial Stability Forum into the Financial Stability Board. This name change is positive because it indicates that it has more of a significant role in the system, but in fact it hasn't been given any new powers at all to deliver this responsibility as a board. And we think that having made the signal, given the signal, if you like, that the FSB is at the centre of the system, what now needs to happen is it needs to be given the authority to deliver that role. Now, you may say, why not the IMF? Well, we think the IMF should focus on its core macro and fiscal tasks. We think the IMF has an important role in this, in that the IMF does go and look at whether countries are following international standards, and that's an important function and would feed into the FSB. But we don't see the IMF as being a regulator in the sense of the body that is responsible for putting in place Basel capital rules, securities trading rules, insurance solvency rules, etc. We think that that is a body which is much more closely linked to regulators. We think the World Bank has a role, but a role largely as technical assistance, because these standards need to be implemented in individual countries. They often don't have the capacity, the institutional capacity to do that. The World Bank can help them build that capacity. So they have an important role, and national regulators have clearly an important role too, because they would need to see themselves as an important sense reporting to this global financial regulator, the Financial Stability Board, and they would be somewhat accountable to that board for their delivery of the global standards. That's, in sum, our proposal. It's ambitious. It may, people will say, not be politically realistic. Why will people hand over sovereignty over these matters to an international body? Well, we recognize that's a difficulty, but in the trade area, people have done so, recognizing that there is mutual advantage in everybody following the same rules.
Good, Howard. Good.